head and shoulder pattern. This pattern you can find very often. As you know, head and shoulder pattern has left shoulder, then head and right shoulder, and can be bullish or bearish. Right now on this screen you can see the bearish head and shoulder pattern. And when we trade gold, we can see very often on 4-hour, daily and weekly charts this kind of pattern. What I want to tell you too, there is another pattern that's very similar to head and shoulder pattern. It's a double top pattern. So you have a first top, then you have a neckline, then you have a second top, and then you have a breaks. So right now we have the both of these patterns on the chart. We have head and shoulder pattern on the 4-hour chart this summer 2022, and we have a double top pattern on the monthly chart. So let me dive in deeper. Hello, this is Igor from FX Igor YouTube channel, and right now we are talking about gold chart patterns. You can see right now on the screen gold monthly chart. On this monthly chart we can spot interesting pattern. You can see that we had two highs in the last couple months, and now we are some kind of a bearish move. If you just zoom in this picture, you can see what I'm talking about. We can see two tops, and we can see some bearish move right now that we need to describe, not only technically, we need to describe this in the fundamental approach. So let me see again. On the left side we have current double top monthly chart pattern, and I think that it's obviously very clear where is the first top, second top, neckline breaks. And right now we are in the moment when the neckline breaks is over, and we are in bearish move on the monthly chart. So this summer can be high bearish potential for the gold price. And I want to add a head and shoulder pattern. If you go to the 4-hour chart, you can see in June that we have one high, then we had a head, then we had a second shoulder, and right now we're in a bearish move. So the both indicators, head and shoulders and double top on the monthly chart, both of them show bearish trend. The good thing is the monthly chart bearish trend can be very long move. So whole summer we can have interesting spots to enter into bearish trades. Now we will try to describe this and answer a very important question. Why this happened? The first thing that you need to know is something changed in the US market. Interest rate hike. So right now if you look this, you can see that during the history, when we have a strong inflation, one of the best tools that we can do, we can rise interest rate. And you can see that 1981 we have a huge, more than 50% high, and we have very low interest rate during the 1945 when the country wanted to rise the stocks and to give more impact on development. Everything that happened, there is some story behind that. As you know, interest rate in 2008 was 2.3%, but inflation and interest rate were not problems 14 years ago. There was a crisis to real estate, but when the crisis started between the 2007 and 2008, interest rate fell from 5.1 to 2.3 in effort to curtail the subprime mortgage and banking crisis. And right now we try to increase interest rates in US because we want to fight against inflation. So what's happened? On March 16, 2020, when was the corona disease, Federal Reserve interest rate was between 0 and 0.25%. Today, in March 17, we had interest rate rise from 0.25 to 0.5%. And in May, just 2 months later, we had another interest rate raise up to 1%. And this is not the end. During this year, we can see interest rate raise, and this can happen just as a tool to fight against high inflation. And on the end, what we need to know, there is a scientist that will tell you that interest rate and the gold price, there's no impact there, and there is no strong correlation. But if you just saw this graph just in last 20 years, you can see one very important thing. That thing that I just want to tell you is very simple. You want to increase interest rate to fight against inflation, but you want to slow down your economy. Then, when you do that, one very important thing will happen. Your currency, dollar in this case, will be stronger and stronger. When we trade gold, we know that the gold price is a ratio between the gold and US dollar. So when I say 2000 gold price / US dollar. So in that moment, you know, if dollar is stronger, the gold need to be weaker. And if you just see this, in 2013, 2012, we had a huge gold price, almost $2,000. And as you know, the interest rate were negative then. Again, if you just look 2016, 2017, you can see just like in the mirror, you can see the price between the gold and interest rate. So if we increase interest rate, there is a fundamental impact, and there is a fundamental explanation that gold price can fall down. But I want to tell you one more thing that we need to be careful. If this happens, if stock market start to go down more and more, people will not invest in stocks anymore. And maybe in that moment, people will start to invest in precious metals like gold and silver. In that case, that can put gold to be bullish. And very often, after this huge downtrend of gold, in some moment, if stock market crash, we can see gold price increase. So we need to be careful, because if something change, it's not simple on the market every. Sometimes things can be complicated. Sometimes we can see the different price in gold. We can see that market wants to see weaker dollar, etc., etc. So I just want to tell you, we need to be careful. Please watch when you invest money anywhere. This is not investment channel, just talking about fundamental and technical analysis. But when you invest, you need to be careful. You need to be think. There's always second story, the second side of the coin. So you need to watch that and think about that. So this is it. I wish you great day, and bye bye.